Hello and welcome to our latest update. In this video, we will cover the most important developments from July and explain what they could mean for investors who are thinking about the long term. July was an eventful month. Headlines ranged from new questions about artificial intelligence spending to rising interest rates on government bonds to fresh tensions in the Middle East. These events caused some ups and downs in the markets, but things calmed down by the end of the month. The broader picture is encouraging, even with a bumpy July. Investment gains so far this year remain solid, and the overall stock market is close to its highest point ever. Over the next few minutes, we will walk through the main themes from July and explain what they mean in plain terms. Let us start with artificial intelligence, or AI, which continues to be a major force shaping markets. During this earnings season, a period when companies report their financial results, investors paid close attention to how much large technology companies are spending to build data centers and AI systems. The central question is whether these very large investments will eventually lead to strong profits. This uncertainty caused noticeable swings in technology stocks and companies that make computer chips during the month. There were also news from a Chinese company called Moonshot AI, which released a new AI model called Kimi K3. Reports suggest it can compete with some of the most advanced AI tools available today. This adds to the broader question of which companies and countries will shape the future of AI. However, as this chart shows, the stock market covers far more than just technology. Areas like energy and industrials have also done well this year. This is a useful reminder that spreading investments across different parts of the economy, rather than focusing on just one area, can help manage risk over time. Next, let us look at what happened with oil prices in July. Fresh conflict in the Middle East briefly pushed the price of oil back above $100 per barrel. U.S. airstrikes on Iranian military sites slowed traffic through the Strait of Hormuz, which is one of the most important waterways for shipping oil around the world. At the same time, a militant group in Yemen attacked Saudi Arabian oil tankers in the Red Sea. These events caused oil prices to spike before settling back to around $90 per barrel by the end of the month. Rising energy prices matter to the broader economy because they increase the cost of fuel for families and businesses alike. Gasoline prices are running around $4.10 per gallon on average across the country, which could keep overall inflation a bit higher in the coming months. Finally, the Federal Reserve, which is the central bank of the United States and sets short-term interest rates, chose to hold rates steady at its July meeting. The current range sits between 3.5 and 3.75%. The decision was not unanimous. 3 Fed officials voted against it, preferring to raise rates instead. The immediate reaction in financial markets was a rise in bond yields. Bond yields represent the return investors earn from lending money to the government. When yields go up, it often reflects expectations of higher interest rates or inflation ahead. For investors, this kind of uncertainty from the Fed is likely to cause some continued movement in the bond market. That said, higher yields also create a genuine opportunity to earn more income from bonds, which can be a helpful addition to a balanced portfolio. It is also worth noting that new tariffs, which are fees charged on imported goods from other countries, took effect in July under updated trade rules after earlier tariff measures expired. Many countries now face tariff rates between 10 and 12.5%, with some specific products facing even higher rates. The full impact on the economy will take time to become clear. However, it is worth pointing out that many of the more severe concerns about tariffs have not come to pass. The economy has kept growing, and the stock market has reached several new highs over the past year. The main takeaway from July is that balance matters. A portfolio spread across different types of investments is better prepared to handle months like this one and to benefit from the opportunities that can arise during periods of market uncertainty. We hope you found these insights helpful. If you would like to learn more about any of these topics, please don't hesitate to reach out. We look forward to speaking with you. Thank you.